Is this market being too bearish, or are they getting this one spot on?
Well, the market is getting very sentimental, just like the Hong Kong weather that, we have had a few days of stormy, cloudy, rainy days, but these will go. I'm still hopeful that we'll see a revival of the Chinese market. The market is now uncertain about growth prospects on the back of global uncertainties, U.S. debt debate, and all these things. I think if we see a catalyst or two that can turn around sentiment, because fundamentals in China, the companies and everything, they haven't really changed much. What we need to see is the catalyst, maybe two catalysts to turn sentiment around, and then we can see a revival of Chinese stock price like what we saw between late last year and early this year.
So what are those two catalysts, right? I mean,
exactly.
We need to see a cut in the MLF in the second quarter. Maybe that June window could be the opportunity here. But what are you looking at in terms of next catalysts?
I'm looking at a broader picture for catalysts to turn things around. One could well be, consumption numbers like retail sales growth, because the trouble with the Chinese growth story right now is confidence. That consumers and private sector spendings are still quite weak because they don't have the confidence, and confidence is something that you can't really model. You don't know how it behaves and things like that. So if confidence comes back for some reason, people feel better about their job prospect and so on, consumption comes back. That fits into the data, and that could be one catalyst. The other one could be a more decisive easing stance by the PBOC especially. Because when you look at the PBOC liquidity injection interest rate cuts, so far they are showing increase in liquidity, they are showing easing, but there's no conviction of the policy easing. What we may need to see is a bigger, stronger motivation or stronger conviction from the authorities to tell the market that, look, we are really here to protect growth. There's going to be more easing in terms of not just cutting one or two interest rates of the policy rates, but all of them, MLF, SLF, PLS, LPR, and all those things, plus the RRR cut. So I think that could be another issue to watch.
Let me follow up on those 2 points you just made. On the retail sales picking up, do you think we need to see a few more months of that? Because that's not a 1 month thing in terms of the 1 month's not going to turn around sentiment. And on the easing side, can I also ask you about a follow-up on that? They don't need to do a lot of easing to hit 5%. So why would they do that?
Well, on your second question, precisely that's what the authorities are thinking, that they do not want to go back to flood the system with money because they don't want to go back to the old investment-driven excess kind of expansion growth story there. And that's why they have been very cautious. Now, my concern is that the policymakers might be too cautious, that the system isn't really that resilient as they thought. Now, if I'm right on that, then we would have to see the authorities come back with more expansionary, more conviction on expansion to turn things around. On the first question, the retail sales, you're quite right that we need to see maybe 2 or 3 months to make it a trend. But with the market sentiment at this point that people are so pessimistic, very downbeat, if we see 1 month jump in retail sales for whatever reason, confidence come back, that could actually inject a short-term optimism into the market and push stock price up. But I admit that would be quite short-term. We do need to see a trend of retail sales or consumption growth come back to show that the consumers is back.